Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. As we speak, Treasury Consulting is a multinational headquartered group based out India, Singapore, and Hong Kong. More importantly, we do have offices in three parts of the globe. The most important thing about Treasury Consulting is it is a 100% profitable company. All entities of Treasury Consulting Group are 100% profitable. More importantly, as an entity, we are a cash-rich company. So, we never claim to be ourselves as Ola, Uber, Swiggy, Zomato, Paytm, Delivery, and all these great platforms who practically claiming themselves to be a unicorn, but the hard reality is they are consistent loss making companies. And because of consistent loss making companies, their retained earnings are negative. But we are not a loss making company. We are 100% profitable company and claim to be a multi-million valuation company. And we can challenge anyone in the world to prove that. As an organization, we predominantly own our hedge fund. By hedge fund means that we take positions in the market. But having said that, our fund is 100% proprietary in nature, which means that, example, today we are taking up a position of $100, then the whole position of $100 is backed up by our own capital. So no third party includes any private equity fund, any venture capitalist fund, or any other is allowed to invest in our organization. And this policy would continue, and we would continue to be a proprietary hedge fund. But yes, like American hedge funds, we take up positions in FICC. By FICC, I mean fixed income currencies and commodities. And being a multinational hedge fund, which means we cover Asian equities, Asian indices, European equities, European indices, United States equities, and United States indices. Probably very soon we would be adding Dubai, Qatar, Bahrain, Saudi, and multiple countries in our equity portfolio. So, like I said, we would continue to increase our equity portfolio. Apart from that, as an organization, we have interest in other revenue streams like our private news desk, our consulting business, our learnings academy, which is Sheetal Academy, our private placement programs, our family office desk, our 200 plus trainings, our video trainings, and lots of product, including our OTT platform over the top. And Treasury Consulting would continue to add more revenue streams in near future. Because being a cash-rich group and 0%, I repeat, 0% dependence on any venture capitalist and private equity, we can go ahead. In case you wish to have any information, you can WhatsApp or my personal number, which is +91 9899 242 978. Alternatively, you can WhatsApp on our back office, which is +91 9818 485 155. Today, I would be covering a very holistic topic, something which I was planning to cover, but unfortunately, due to time constraints, I couldn't. Today, I would be touching the most fraudulent, I repeat, most fraudulent topic in the world of financial market, specifically speaking, investment banking, which is known as block trades. You heard me right, which is known as block trades. See you in the part 1. Very interesting block trade. Good evening. Welcome to part 1 of the video titled Block Trades, the most fraudulent practice. But before I continue, I would like to show you article. This article I have taken from Bloomberg. You know that every day I watch Bloomberg website, Bloomberg TV, various other news from Reuters, CNN, CNBC, international news platforms like Wall Street Journal, New York Times, magazines. But now I have made a practice, and the practice is I have started taking the printouts of important articles, which I'm putting in a file. Because later on, I might be needing that article, so I'm putting them in a file. Anyways, let's continue. This article, which is published on 25th February 2022 on Bloomberg website, this article titled Morgan Stanley discloses US probe into block trading business. And this isn't the first time when the Morgan Stanley name came because of a negative reason. History is witness that American banks, whether they are Citibank, whether they are Goldman Sachs, whether they are JP Morgan, whether it is Wells Fargo, whether it is Morgan Stanley, whether this is Bank of America, their name continue to come for one or another negative reasons. This is a fact. There is a guide which nowadays I am reading, and this guide is about the top 6 US banks and their frauds. Trust, this guide is 250 pager. And I'm reading this guide on a line to line basis. The more I'm reading, my eyes are like, what the hell these American banks are up to? Not a single fraud they left with. Not a single fraud they left with. Now Morgan Stanley is being probed by Securities and Exchange Commission, United States, regarding their practice in block trading business. Now, before I continue, let me first give you an example of what the hell is block trading. Like the word suggests, block trading, block trade. Guys, there is a very big apprehension we have in the market, and that apprehension, rather stupidity, is block trading always happens in listed stocks, means the companies, those who are listed. I'm giving an example like Google, Microsoft, Amazon, Facebook, Accenture, Cognizant, Apple, listed companies. No, block trade happens in unlisted companies also. So this is the highest stupidity if you're carrying in your mind that block trade happens only in listed companies. No, block trade happens in unlisted companies also. So what the hell is block trade? Whenever a company, now when I say a company, I mean listed and unlisted both. I will not repeat this. I mean listed and unlisted both. When a company decided to sell a great quantity of the stocks in the public, and this quantity of the stock is so big that it can influence the stock price of the company, it can even influence the ratings of that company, or it can even trigger a massive sell off about that company. So I'm giving an example. I repeat, it's an example. Suppose Apple, the founder, Tim Cook and few board members together decided to sell their entire holding in Apple. This is an example. And assuming Tim Cook and the founders together, basically the board members, holding 10% stake in Apple together, everyone, if they sell their stake in a single day or probably in a week's time, this may trigger a substantial fall in the Apple prices. So, as we speak, Apple is near about 176. But if the Tim Cook and few board members together, whereby the stake is near about 100 and around 10%, if they sell, this would trigger a massive selling in the Apple stocks. Probably as we speak, Apple, which is near about 176, might come down to 100 also. So it was an example. The similar situation is to unlisted companies also. People tend to believe that unlisted companies always like a startup. No, that is incorrect. There are many private equity and hedge funds of the globe. I repeat, there are many private equity and hedge funds of the globe, those who are unlisted. Rather, guys, I'm not quoting any name because I'm planning a video and collating the data. But in this week, which has just passed, one big name in the financial market decided to go private, which means that they are not at all interested of being public. And I think they are not incorrect because once you are public, you have huge scrutinies. And sometimes you are facing unnecessarily harassment by the investors because 99% of the investors have no knowledge. They only look at bloody one thing, which is PAT or maximum EPS, and they are hardly bothered about the movement and the real reason behind the same. So, guys, when a private company offload a great stake, then the massive selling is much more dangerous than a listed company. Because the point is the information about a listed company. So let's speak about Apple. Information about Apple, the past 10 years of Apple, their balance sheet, their cash surplus, their reserves and surplus, their PAT, profit after tax, their EBIT, operating profit, their EBITDA, all these things are available on internet. So you might not need Reuters or Bloomberg to do the analysis, but yes, if you are looking for spoon feeding, you may need Reuters or Bloomberg. But as far as the Apple, Microsoft, Amazon, and all these companies are concerned, majority of the data are on their website. So when, I would say these companies quit or sell a substantial stake, there is a trigger. Now, block trading is done by top investment bankers. They are not done by the third class investment bankers. They are done by top investment bankers. So, example, today, a big private company, I'm just taking an example, any private equity firm wanted to sell their 10% stake. Now, if you're selling, you need a buyer. Common sense. Who will arrange that buyer? And at what price he would be arranging that buyer? That's a very important question. I assume that the private equity firm I am talking is 100% profitable in nature. Having said that, one important question is who would be doing that block trade and what would be the book building process of that block trade, or how it would be different than a normal IPO. I will again repeat, block trade is the most fraudulent business, just like mark to market accounting we have in the world of investment banking. In the world of accounting, it is mark to market accounting. In the world of investment banking, this is block trade. And probably in the next video, I would be talking in detail about the block trade. But remember that very important thing about the part one, that please now onwards do not believe that block trade is only done by the listed companies. No, block trade can be done by the unlisted companies also. And when I speak about unlisted companies, I never meant to say the loss making startups. I meant to say unlisted companies include the companies, those who are 100% profitable in nature, but they don't want it to be listed like us. Alternatively, the loss making startups, those who not got the instruction from their bosses to get public. See you in the part second, very interesting part.